every Monday to Friday. This is Peter Lewis's Money Talk.
Money Talk.
Good morning, this is Peter Lewis. It's Tuesday the 16th of July. There's been an economic data deluge from China in the past 24 hours. I'll have an update for you on this morning's Money Talk, along with the rest of the main business, finance and economic news. And this podcast is sponsored by Surfing Group, which is headquartered in Singapore and offers online financial services to 50 million customers across 10 countries. In today's business and finance headlines, China's economy grew 4.7% in the second quarter, missing expectations of a 5.1% expansion and lower than the 5.3% rise seen in the first quarter. Across the opening 6 months of the year, the economy expanded 5% year-on-year, which keeps China still on pace to achieve its 5% GDP growth target for now. The weaker-than-expected result was driven by a sharp slowdown in household spending and continued falls in the property markets. And despite another month of largely softer-than-expected data, the People's Bank of China held its one-year medium-term lending facility rate unchanged at 2.5%. That was in line with market expectations. The PBOC has thus far held back from rate cuts due to the priority placed on currency stability this year. China's third plenum commenced Monday, and it lasts for 4 days. Investors and the public are looking to the Communist Party for a credible plan to navigate the country's current challenges, which include restoring confidence in the economy, which is hovering near record lows, and dealing with rising tensions with the West. Businesses and investors will also be looking for a plan to deal with the more than 3-year-long property crisis, the demographic decline, the transition to green energy, and details of how to fix local government's broken funding model. The US dollar and Bitcoin moved higher Monday following the shooting of Donald Trump at a rally over the weekend, which has led to speculation that the incident will increase his chances of winning the presidential election. Mr. Trump's odds of winning November's vote and becoming president increased to 69% after the weekend's developments, up from 60% on Friday, according to betting site Predictit. On today's Money Talk, we're joined by Mark Michelson, Chairman of the Asia CEO Forum at IMA Asia, Andrew Sullivan, founder of Asian Market Sense, and in Washington, D.C., our US economics correspondent, writer and broadcaster, Barry Wood. If you want to get in touch, please go to my website, peterlewismoneytalk.substack.com, and that's where you'll also find my Asian business and finance newsletter, which is updated right now.
Peter Lewis's Money Talk.
US stocks closed at record highs in a positive start to a week in which investors will be assessing corporate earnings and retail sales data for the latest clues on the health of the US economy. The blue chip Dow jumped 211 points, or 0.5%, to a new record closing high of 40,212. The S&P 500 added 0.3% to 5,631, touching new intraday highs in the session, and the Nasdaq Composite rose 0.4% to 18,473. The small cap focused Russell 2000 rose for a fourth straight session, finishing 1.8% higher, having on Friday notched up its best weekly advance of 2004. And on Monday, it reached its highest level since January 2022. Goldman Sachs said a second Trump term could help small caps outperform, citing their strong record after his victory in 2016. The 10-year US Treasury yield rose 4 basis points to 4.23%, and long-term bond yields also rose, with the 30-year yield rising 6 basis points to 4.46%, and the yield curve between the 2- and 30-year bonds uninverted for the first time since January. In the currency markets, the Trump assassination attempt and comments from Fed Chairman Jerome Powell took the limelight on Monday. The US dollar index snapped a 3-session streak of declines logged last week. It rose 0.2% after Jerome Powell acknowledged that the recent 3 months of inflation data has increased the Fed's confidence that inflation will return to target, but he caveated that, saying more data will add to that confidence. And the yen slipped 0.1%. to 158.09 Japanese yen per dollar, and the US dollar was 0.1% higher against the yuan at 7.2592 renminbi in onshore markets after a deluge of Chinese economic data. Gold jumped back up to near record highs today. It rallied 0.4% to $2,422 an ounce. May's intraday record of $2,450 an ounce is in sight. Brent crude oil settled 0.2% lower at $84.85 a barrel, and the price of Bitcoin rose almost 10% to $63,705. That's its highest level in 2 weeks following the assassination attempt on Donald Trump. Hong Kong's Hang Seng Index led losses among major equity markets in the Asia region, dragged lower by losses in tech, property and consumer stocks amid the mostly weak Chinese economic data. The city's benchmark index closed 277 points lower, that's 1.5%, at 18,016, falling from a 3-week high reached last week. On the mainland, the Shanghai Composite rose 0.1% to 2,974, and futures markets pointing to a decline of about 200 points for the Hang Seng at the open should start trading just above 17,800.
Every Monday to Friday, this is Peter Lewis's Money Talk. Peter Lewis's Money Talk.
Let's welcome our Tuesday morning guests. Mark Michelson, Chairman of the Asia CEO Forum at IMA Asia, is with us. Morning, Mark.
Hello, Peter. Hello, everyone.
And also with us is Andrew Sullivan, founder of Asian Market Sense. And also with us from Washington, D.C., our US economics correspondent, writer and broadcaster, Barry Wood. Morning to you, Barry.
Good morning, Peter.
Well, let's start in the US. This extraordinary election race been completely upended, really, over the weekend, hasn't it, by the attempted assassination attempt on Donald Trump. Thankfully, he was largely unhurt following that shooting. Mr. Trump's odds of winning November's vote and becoming president increased to 69% after the weekend's developments, up from 60% on Friday. That's according to betting site Predicted. Barry, markets almost behaving as Mr. Trump has won the election now. But surely this has obviously changed the narrative of the race. But how much has it put Mr. Trump ahead?
Well, we don't know, but we'll know in the next few days. I think the polls will indicate that he's getting a big jump because of this assassination attempt. I think it's really important to stress, had he not turned his head to the right, he would be dead. That bullet missed his head by millimeters. And it's extraordinary to just be grazed in the ear. So there's always a sympathy vote for that. Mm-hmm. And I think we're taken back to Ronald Reagan 44 years ago when he was shot coming out of an election, not an election, but just a political event at a Washington hotel. And he behaved heroically. I think you have to say that Donald Trump did as well. But when he was operated on at George Washington Hospital, Ronald Reagan said, "Honey, I forgot to duck." And the phrase remained with people. The second thing I think should be mentioned, because the convention of the Republicans is in Milwaukee, 1912. Teddy Roosevelt, who was famed as being vigorous and fit and all that, he had already been president. But his anointed successor, William Howard Taft, he really was shocked that Taft had deserted his policies. So Roosevelt, TR, ran as a Bull Moose Party candidate. He was shot by a police revolver, and somebody had one, in Milwaukee. But he had a glasses case in his jacket pocket. The bullet penetrated that. Then it landed on his speech, which was 50 pages. And there was blood. But Roosevelt went ahead and gave his speech, which went on for an hour. I'm not suggesting there are parallels, but I will say this. When Donald Trump enters the convention hall in a couple hours' time, he will be greeted, I think, as a miracle. There will be a religious kind of emphasis to his survival. And I agree with where you started, Peter. The polls and certainly market sentiment indicate this is going to be a Trump victory, given what we know now.
And what can you tell us about his running mates? Because he's announced that J.D. Vance, the senator from Ohio, is going to run as vice president. What is he all about? Because he wasn't very enamored with Donald Trump. He called him an idiot at one stage, I seem to remember.
Right. Well, look, J.D. Vance is a phenomenon as well. First of all, he's only 39 years old. Imagine that in American politics. So he's very young. He went to Yale, but he's a hillbilly. He came from Western Ohio, where a lot of the people have migrated up from Kentucky. So he wrote a book called Hillbilly Legacy, which propelled him to fame. He had an advocate a Chinese advocate teaching at Yale. He had enlisted in the Marine Corps right after 9/11. And the rest is history. This guy has moved with such speed. Now he's been in private equity, so he knows that. And of course, you're right, Peter. He had condemned Trump, but that was a long time ago. For the last year or two, he's been a Trump acolyte, to say the least, a real advocate of Donald Trump.
Mm. Mark, I suppose out here, if you look at the financial markets, look at the way the dollar's reacted, Bitcoin has reacted, the way the betting markets have reacted, we need to start preparing for a Trump presidency.
Yeah, we talked about this last week. And of course, what Barry said has just been reinforced. One slight correction, it's hillbilly elegy.
I'm sorry.
That's all right.
Legacy, elegy, exactly.
But J.D. Vance, one of the issues that's coming out of this is the polarization, right? Which we've seen a lot of. Is this going to tamp it down, and what's going to be the attitude and the approach at the convention? Former President Trump suggested that he would be more mild, that he understands what's happened to him, and so on. But J.D. Vance, came out almost immediately accusing the Democrats and Joe Biden specifically for being the cause of Trump being a target for assassination, even though we don't have really any information what the motivation was, and it may not be that at all. But nonetheless, it shows that that's still there. So I agree with Barry. I think that's now the conventional wisdom that Trump is going to win, and he's in a very strong position, and I think Asian markets say that. He's also probably been helped, it's hard to say, by a court decision by Judge Cannon in Florida, who's just thrown out the case against him on documents that he borrowed from the U.S. government. And although that could be appealed and they could come back, nothing's going to happen before the election, and nothing's going to happen with any of the other cases either. And so that's another uncertainty that's sort of been put aside, and I think it just makes him stronger. Mm. Anything could happen. Anything could happen. But it's also taken the focus, at least for now, over whether Joe Biden's going to run or not, right?
Well, that's another backstory that's going on in this, isn't it?
Something may still happen. I don't know how this will affect that, but nonetheless, he's sort of, he's made a speech and so on, but he certainly is not the story.
Andrew, put an Asian perspective on this for us. What are we supposed to make of this out here?
Well, I would just look at what happened to Modi. Everybody thought he was going to get a landslide election. Everybody thought that it was all in the bag. And yet, at the end of the day, it came down to the electorate. And we have to remember, J.D. Vance has already said that if he'd had Mike Pence's job, he wouldn't have endorsed the election results. Now, that's going to annoy some swing voters.
You're right.
He's also very much pro-abortion, pro-anti-abortion, which again is going to marginalise him from a lot of the swing voters there at the moment. I mean, I think as has been said, this is Trump point 2, but that doesn't really go to those swing voters. That really just goes to the heartland of the people they've already got. And so I think the other last thing to say really is it really comes down to an election of the vice presidents, because we've got two doddery old men, one that's now been shot. And I wouldn't underestimate the shock factor to Trump. I mean, he's passed it off as, he's fit and he's fine. But anybody being shot at that age is not going to do their constitution any good. And I think we have to remember that. It's going to have an effect on his confidence in the future. It's going to have an effect on him. So I think, to me, the most interesting thing will be the fact that we're going to see a vice president debate. And then we will really see whether Harris has got the political acumen over J.D. Vance or not. And I think that could be the swing factor.
If you want to play the Trump trade, that's what investors are looking at now on the basis that he's going to win. What do you do? What sort of view should you be taking on things like the US dollar, for example, and the fact that maybe, we're going to see a big increase in tariffs?
I think from Asia's point of view, you look at the fact that he's going to put tariffs on, then you've got to be very worried about the suppliers to Middle America. A lot of those retailers are going to come under a lot of pressure, because of the price rises and because it's going to hit the Middle American economy. So you've really got to look at maybe not so much the dollar, because I think that's already a very, very crowded trade. But you look at people like Walmart and Costco who actually have pricing power, because when these tariffs hit, American consumers are going to have to consolidate. And therefore, it's going to come down to the people in the market, the retailers in the market that have the pricing power to withstand that.
But Barry, is this? Are people thinking along those lines yet? That okay, they're assuming Trump's going to win the presidency, but are they thinking about things yet, like sort of tariffs? What that would mean for U.S. inflation, for U.S. growth, for U.S. Fed cuts?
Well, I think the educated elite or the coastal elites are thinking about it and condemning it quite rightly, as Andrew does. It would have a significant negative impact. I'm sure of that. I don't think it's going to happen, but we shall see. I think Mark has got it spot on. We don't know what's going to happen. We can't predict this future. In American politics, we've got a long time before the election. So we can say, yes, things look this way now. How will they look in 2 months' time? We don't know. We really don't have a clue about what Donald Trump 2.0, if he is elected, what his policies will be. He hasn't named an election team, an economic team. If he does, then we'll get some clues.
Yeah, exactly. And, I think the uncertainty, our members have been concerned about this for a while. And of course, what they're concerned about, they've been concerned about tariffs under Biden administration as well, and been trying to maneuver around them. If that gets more complicated, and even if it's not which I agree with Barry, it's unlikely to be what's been mooted. It's maybe not that extreme, but even if it's increased a little bit or the uncertainty increases, this will make it more difficult in terms of how they manage, because there aren't many alternatives to China. We've been talking about this for a long time, and we're going to talk about the Chinese economy later. But still, it's really important to almost all the companies I deal with. And, they go to Vietnam, they go to India, they go to other places, but they're not China. Anyway.
Okay, well, look, let's switch our attention to China, because there's been a lot of economic data out over the last 24 hours. China's economy grew 4.7% year on year in the second quarter. That's according to official data from the National Bureau of Statistics. It missed forecasts, and it also marked a slower rate of expansion compared with the previous 3 months. GDP was 5.3% in the first quarter. Economists had expected a 5.1% rise. Nominal GDP, taking into account inflation, indicated that persistent deflation pressures remain quite a key concern. Nominal GDP rose just 4%. Andrew, it's not hard to say that there's been a lot of signs of this coming, hasn't it? From things like the trade data, from the inflation data. Is there anything good that we can find in yesterday's data release?
I'm not sure that I don't think it's really changed anybody's view. As you're saying, none of this information is dramatic. I think it really just underlines the fact that so far as he is concerned, the economy is not his main focus at the moment. And I also worry, though, slightly that, we still have unemployment at 5%, which I think in a lot of people's minds really means that you have to question an awful lot of the information that we're now getting out of China. All that said, we still know that there are, EVs, solar panels, these factors are going to be key to their economy and they're where they want to focus their attention. Whether the rest of the world buys it from them is questionable, but certainly it's we know where they stand. It's a matter of whether they can make any money out of it.
Mm. Mark, what do you make of this data? I mean, what was very disappointing in all of the numbers maybe was the retail sales data up year in June by a very disappointing 2%. Shows really a lot of weakness, doesn't it, in domestic demand at the moment, which presumably is a key thing that policymakers need to focus on at the third plenum.
Yeah, you would hope so. Although, as Andrew has suggested, that doesn't seem to be a high priority. The government seems to be, and Xi Jinping seems to be moving toward rebalancing towards services, higher productivity manufacturing, especially in high tech and so on, but trying to move away and take the pressure off of property as a key driver of growth and somehow boost household consumption. But it's not clear how they're going to attain some of these objectives. They need reform measures. They need to deal with security in terms of housing, in terms of healthcare, in terms of education, and all those areas. And as Andrew suggested, unemployment. It's a big deal, especially youth unemployment. And this has been said by a couple of economists, but who employs the youth? The private sector in many cases. And the private sector has not been bolstered for the most part in these kind of reforms. And that's an issue too going forward, I think. So I think that's what we have to worry about. I'm not looking for anything dramatic out of the third plenum, but maybe we'll be pleasantly surprised.
Okay, well, if you look at those private sector numbers, I'm just trying to find them at the moment in industrial production, there was a very big difference between the state sector and the private sector. The private sector was really lagging behind quite considerably, wasn't it?
Yeah, that's the issue. And these are the partners of a lot of the companies that we work with as well. And some of them are facing serious challenges, which are sometimes below the radar a little bit. But certainly they're affecting business. Doesn't mean there aren't strengths in the economy, and Andrew pointed out some of those. And still, Chinese economy looks better than a few others we can mention. But at the same time, these are concerns going forward.
Well, we are seeing good growth in some of the high-tech sectors, aren't we? Manufacturing, computer, electronic equipment manufacturing, they seem to be supporting the economy at the moment.
I think the trouble with that, though, is that those aren't really high employment areas. I think you're talking about areas that are very much into automation, processes rather than employment. And going back to what Mark was just saying, I mean, a lot of these, the unemployment figure is particularly worrying because you remember under the Chinese system, people can only register as unemployed in their hometown. So we're completely excluding the migrant workers. And I think one of the bigger areas of problems is not just the graduates, it's the fact that the middle-aged people now can't find work. So those labouring jobs that were so easy to come across will go to the youth rather than the middle-aged. And that's going to put a huge strain on the whole system. And I think, personally, social unrest is the biggest concern that we're going to see from China.
Mm. Barry, when you look at this from a US perspective, obviously it matters for global growth, doesn't it? What is significant is China's share of global growth is declining at the moment. It was about a third. It's below 30% now in terms of its boost to global GDP. So I suppose that's significant for the US as well.
I think it is. And I'm glad that Andrew mentioned Costco and Walmart. I mean, my goodness, these are huge vacuum cleaners for Chinese goods. And we'll see what happens. For me, what the data say, the data that stands out would be housing, further decline, and no advance in consumer demand. Consumer demand is in many ways the issue. So I don't see anything, I don't see any bright lights. If you want to boost exports, you're going to have conflict. And I think that conflict's already baked into the cake. That's going to surface in the next few months because the Europeans and the Americans are smarter than they were 10 years ago or 20 years ago. They're not going to simply absorb these goods and allow their own domestic industries to be decimated.
And you're going to see actions, as we just saw, with the U.S. government taking action against manufacturing in Mexico, which is, now it started with steel, I guess. It's automotive is obviously those, and a lot of those are associated with multinational companies operating in China who've moved part of their operations to Mexico and to other places, but brought some of their Chinese suppliers with them. So there's a very complicated process, and I think will come under scrutiny under whoever becomes president in
Correct.
November.
I agree, Mark.
Yeah.
So, I'd just like to make one other point. I mean, one of the figures that people have said was good was the export data that we saw last week. But I think we have to remember that a lot of that was probably brought forward export because shippers are aware that because of the Red Sea situation, shipments are taking longer, so they're just bringing forward a number of those orders. So I think as the year goes on, it could actually get worse.
And also, presumably, the tariffs are having an effect. People are trying to get in front of those tariffs that are going to come into effect in August.
Indeed, yeah. I mean, it doesn't bode well.
The Chinese government has always said that the absolute growth number doesn't really matter. What matters is the quality of growth. Are there any signs in the data that the quality of growth is improving? Because normally you would look at things like maybe business investment, domestic consumption. That obviously, clearly there, that's quite subdued. So are we seeing at all, despite maybe the slowdown, an improvement in the quality of growth?
Not that we really are seeing an improvement in the quality of growth. I mean, I think what she has been aiming for is working up the technology ladder from no longer selling plastic toys to selling high-end tech equipment. But the reality is that the numbers do count, and they are important, especially on the employment side. And that's going to be a worry because, again, we saw yesterday that the US putting pressure on the Dutch company SML just about the Chinese graduates that it takes to its training system. The US is coming down very hard and trying to close every loophole that it can find to contain China at the end of the day, and it will be successful because of what China is doing on the political front and on the international front and upsetting other countries and wanting to change the world order, that a lot of countries, as Barry was saying, are aware of these issues and they're waking up to them.
Mark, are you seeing any signs of improvement in the quality of growth?
Well, I know that's a mantra, isn't it? Quality over quantity. And I agree with Andrew in some ways, and of course, a lot of it is on the high tech and on the upper end of the scale there's been. But again, the key areas that we're concerned about, like property, like consumer spending, et cetera, are areas where there doesn't seem to be much movement yet. Part of it, again, we've got a big debt problem in China, local debt problem that sometimes limits what can be done in these areas, and other concerns. It's quite cautious, and it's hard to tell whether that has to do with economic assessment, political, or domestic political issues, or both. But whatever it is, it's not meeting expectations, which I think is sort of an overall theme at this point. Chinese economy overall, from a business standpoint, we can't generalize too much, is not so bad, right? There are still some bright points, but at the same time, it's not what they hoped it would be, and that continues. And there was some expectation that would be a little bit better in some areas, at least this year, and except with a few exceptions, that hasn't been true.
Barry, you were alluding to this earlier, but really, there's the trade tensions are just going to heat up, aren't they? Regardless of who's president in November.
As surely as the sun will rise tomorrow, there's no doubt those trade tensions will accelerate. They will intensify. And I don't see any solution. No wonder the Chinese government doesn't want to talk about China 2025. When did they drop that? 3 or 4 years ago? But the results are there, and the results are impressive. I mean, in EVs and in solar panels and in other high-tech trains, for example. Look at the new aircraft. So it's all worked. But how are you going to dispose of this? That's the question. That means trade tension.
So, Mark, this is going to be one of the issues we're going to be looking at, isn't it, from the third plenum to see what the government says about that. Are there going to be any signs that maybe they will try and dial down this pressure? What are you anticipating?
Well, I'm anticipating sort of what it's hard to know, sort of what we've been talking about, a movement toward a reform in the economy, quality over quantity, a focus on the high tech areas, saying that they want to rebalance the economy and help with the consumer economy and so on, property. But what we need to see is some specific measures and some measures that at least give us hope and sort of move us in that direction. And that's what we're not clear about yet. And I'm not sure we're going to get that. There's going to be another meeting, the Politburo meeting later this month, where there might be some more specifics. That's possible, and that often comes. So I think that's the last week of July, as I remember correctly. So that's another area to look for.
What people are also hoping for is, rather than just relying on a trade surplus to drive growth, and the Chinese trade surplus hits a record, as we saw in those trade numbers, people looking at a fiscal boost to consumption, some demand side policies. Do you think we'll see anything along those lines?
I think there will be talk about it. It's a question whether they have impact, as I said, and this has been. Steve Roach just had a long interview, sometimes a controversial figure, had a long interview in the South China Morning Post. And again, he mentioned feeling secure, consumers feeling more secure about wanting to spend. And that has to do with again, as I mentioned, housing, education, healthcare, and all that sort of thing, the lingering effects of COVID and things like hukou reform. The household registration system that doesn't extend to people that have moved away from where they used to live, and an area that the Chinese government's trying to move forward for some time, but they keep getting pushed back as local governments don't really want to support people that have moved in because they can't afford to. So this is going to be really important in moving forward and in making a difference. There has to be a signal that things have changed and that it's people feel more comfortable going out. They have some money, apparently.
They have the money. You're right.
Savings are there, and in fact that they've grown, so they're there. It's just they're not spending it.
Andrew, what are you looking for from the third plenum?
I think hukou reform is probably the most hopeful thing that we can expect, because it doesn't cost the central government that much per se. But I mean, as Mark's saying there are huge concerns. I mean, they're still worried about the major cities being overrun, which goes back to exactly why Mao brought it in the first place. And I think, unfortunately, as you look at China's economy at the moment, a lot of it does seem to be a rerun of the late years of Mao, where the central government lost focus, came up with spurious ideas for growth, and caused huge problems. I mean, effectively, he has worked back everything that Deng put in place to stop that happening again. And surprise, surprise, it's happening again. So, I think the trouble is there isn't the power outside of Xi within the party to counteract that. And that's the big problem.
Mm-hmm. So you think maybe this is all going to be constrained by ideology? The government doesn't like anything that smacks of what President Xi calls welfareism. So that's going to rule out things to help the unemployed, to help childcare, so that women can get into work better. All those things are off the table.
Well, I think the trouble is he's painted himself into a corner, unfortunately. The Communist Party doesn't make, they don't have elections because the party doesn't make mistakes. And he's gone out on a long limb now, and he's got nowhere else to go.
Mm. Mark, in terms of how we can see something concrete come out of the third plenum, I mean, in the past there has been some quite big announcements, haven't there, from the third plenum? But do you think maybe, as Andrew was saying, that the government has sort of boxed itself into a corner here?
Well, it seems that way, and of course, one of the most well-known one in recent years was more than 10 years ago. It might have been Xi's first third plenum where the focus was on reform and was on opening up the market economy and so on. And it turned out that it wasn't quite what it seemed it was going to be. So there might be a little bit of, we'll see. There might be a little bit of caution on those big announcements going forward. I think the combination of the two meetings this month will give us some indication of whether they're going to move in this direction. But maybe we'll be surprised. But it doesn't look like they're going to move in a big direction at this point, because they're still testing the waters in many ways, both domestically and internationally.
Okay, well, let's switch our attention to the US economy. A lot of data there as well. I mean, Barry, we saw, didn't we, last week, US inflation fell to 3% in June. And on a monthly basis, the consumer price index turned negative, declined 0.1%. That's the first time we've had a negative decline since May 2020. Also, we had Jerome Powell speaking today in Washington. I rather got the sense that he's starting to prepare the ground for rate cuts here. He's been saying all along, hasn't he, that he wants to see more evidence that inflation is coming back to target, but at the same time is now emphasizing it doesn't need to get there before they start cutting rates.
You're absolutely right. And I would go further to say that he has been doing so for several weeks now. And there will be a rate cut in September. I think you can almost bet on it. The reality is that Mr. Powell is making clear that the markets understand where he is, and that he has now identified weakness in employment as important as inflation. But essentially, there's progress in both areas. The weakening of the labor force is not terribly significant as yet. And certainly, as you said, the inflation data is encouraging. So, yes, I think look at the markets. I mean, it's now almost so repetitious, you could write the same story every day about the Dow Jones or the NASDAQ. Another record high. And that is in large part reflecting investor confidence.
There is a meeting in 2 weeks' time at the end of July. Is that going to be too early for a rate cut?
Yes, I think so, but what do I know?
Mark, what are your thoughts here? We're starting to see clearly, not just Jerome Powell, but other members of the FOMC as well, now starting to talk about, moving on from saying we want more confidence that inflation is going to get to 2% to saying that we're now confident that it will, and we don't want to wait too long. Otherwise, we might overshoot.
Yeah, we've been talking about this for a little while, as I recall, and I'm not a specialist in this area, but I certainly tend to agree with Barry that it looks like it's on the cards. The Fed has said they're going to do it, including Jerome Powell, and September seems to me like the most likely. July seems a little bit early.
Andrew, from a market perspective, what changes here?
Well, I think this week's retail sales number is going to be the key one. I mean, as Barry said, I think they've always been aware that they have that dual mandate, and they've been more worried about inflation because they had egg on their face because of how inflation crept into the system when they were ignoring it. But I think we really need to see what's the strength of the US consumer. And I think there are questions there, because that's underlying. That is the real reflection of how strong the economy is. If the US consumer, and certainly the lower income, middle income and lower income consumers, if those guys aren't confident about the economy, we're going to see it reflected in those retail sales numbers. And I think that should spur the Fed into quicker action rather than later.
Yeah, that's an important point, Andrew. And I think that that retail sales number could reflect more important data than anything else in terms of whether the Fed would make a move in July. And as you say, it's only 2 weeks away.
And that's going to be very closely linked, of course, to the employment market, isn't it? Consumer confidence and the jobs market are very closely intertwined. And we are seeing that jobless rate now start to creep up.
I think it's not only the jobless rate, though, but I think it's also we've got to look at, the JOLTS numbers, the fact that actually if you lose your job, it's taking you longer to find a job. I think that's a very important thing. It does show that the pendulum has swung back towards the employer from the employee.
And this is affecting what we talked about to begin with, the election as well, because there's a perception among many Americans, apparently, that things were a lot better 5 or 6 years ago in all these areas. Whether they were or not, maybe it doesn't really even matter, because that's a perception. And that also is helping to boost the Trump candidacy.
If there are a couple of rate cuts before the election, does that help Joe Biden? Does it maybe start persuading people to think that the economy is improving and it might be down to him?
Well, I think the result of your question is you're assuming 2 rate cuts. And that would say that the Fed sees something negative in the economy that the rest of us in this discussion do not yet see. So, yes, that should help Joe Biden. But Joe Biden hasn't been helped thus far.
I think you've also got to remember, though, that a strong economy is not necessarily a good reflection of government policy. That's the real problem. Policy changes take years to really have effect, and Trump, when he came in, benefited from the predecessor. Biden, to an extent, was the same. So it's never quite that simple. I think that the more important thing, as we were saying earlier, is Trump's commitment to tariffs, and trying to suggest that he can put tariffs in and reduce taxes. I think is a serious worry for any reasonable person.
Quite right.
Well, the markets are pricing in now 100% probability of 2 rate cuts and a 40% probability of a third one before the end of the year. Let's suppose we do get those 2 rate cuts before the end of the year. What happens after that? Because presumably then it's going to be much harder, isn't it, to get the conditions right, to keep on cutting after those first 2. So what is it going to need to really keep those rate cuts going?
Well, I would say for a start, I don't believe the markets. I mean, the markets at the beginning of the year were saying we were going to have 6 rate cuts this year.
Yes, that's right.
That's right.
We have to remember the market talks up its own book. It wants these rate cuts. It's not looking at the economy. It's looking at what it does for the banks themselves. Those are the people that are really driving for rate cuts. It's not. The Fed is being quite reasonable, I think. I think Powell is actually a good stonewall against this sort of market momentum thinking rather than the reality. He's saying we're going to be data dependent. It's not what you want, not what you are used to. It's actually what the data supports. And I think if we do get 2 this year, I think we'll see that pause, because again, the Fed will want to see that the circumstances have changed dramatically that allows them to do the next stage.
Mm-hmm. And the Fed may change a lot beginning in January of 2025, as we know, because it's been the focus of a lot of the campaign rhetoric.
Mm. Barry, final thoughts from you then. Has the Fed done a good job overall? Do you give it good marks?
I think it's done a phenomenally good job, and it builds on the success of some of the previous Fed chairmen. You go back to Paul Volcker breaking the back of inflation. What was that, 1979? Yeah. Extraordinary. I think the maestro, I don't think his record is as bad as some critics say. And, Ben Bernanke got us out of the financial crisis. But this is a real triumph. Fed policy has been absolutely fantastic. You cannot have interest rates artificially low for a sustained period of time and say it's all normal. It's not normal. But my goodness, now or at least we're over 1 year into a new normality that is almost like it's always been. You've got 3% over inflation. You've got 5% for overnight money. You've got 8% mortgage, and 8% mortgage is fine in the States. Mm-hmm. And indeed, the housing sector remains strong. So, you've given me an opening, Peter, to say that, I think Jay Powell's done a phenomenal job.
Okay. Well, great. Well, thank you very much. You heard there Barry Wood, our US economics correspondent over in Washington, D.C., Andrew Sullivan, the founder of Asian Market Sense, and Mark Michelson, who is chairman of the Asia CEO Forum at IMA Asia.
You're listening to Peter Lewis's Money Talk.
Money Talk.
Thank you for listening this morning. I'll be back tomorrow with more business and finance headlines. To discuss them, I'll be joined by Enzio von File, Capital Preservation Specialist at Financial Shield, and John Schofield, Managing Director of Tempus Investments. With a view from Japan is Dan Kerrigan, CEO of Interactive Brokers Securities Japan. And if you want some more information on some of the top stories from the region, please take a look at my daily newsletter at peterlewismoneytalk.substack.com. See you tomorrow.
Money Talk.